Hello everyone, my name is Dominic Aragon. I'm the founder of We Care Auto Care, and we've currently been operating for a couple of years. We help customers from young drivers to older drivers of all ages, especially if 2021 cars have become more compact and electrical than ever. We tend to be most busiest in the summer because that's when customers tend to have the most problem with their cars. Generally, when customers come into our mechanic shop or any other mechanic shop, they often question themselves whether we can be trustworthy, reliable, and if they can get a good price. And I can assure you and our customers, we are trustworthy, we are reliable, and we are a profitable business willing to help you. I'm going to show you the first 2 months of starting out my business. I'm going to be going over the transactions that took place over those 2 months, as well as the chart of accounts and the income statement of both those months. First, the chart of accounts, which should be listed right here in the corner. I have my assets, which is cash, cleaning supplies, furniture, tool supplies, food supplies, office supplies. My liabilities, which is accounts payable and wages payable. I have my owner's equity, which is capital, drawing, and income summary. We have my revenue, which is my repair revenues that we get from fixing customer vehicles. And then we have the expenses imposed on my business, of course, which are wage expenses, rent expenses, cleaning supplies expenses, telephone expenses, utility expenses, insurance, postage, office supplies, food supply expenses, and so on. So those are all expenses imposed on my business. And the importance of the chart of accounts is to account for the following transaction for that month. The assets are in the 100s, the liabilities in the 200s, the owner's equities in the 300s, revenues in 400s, and expenses are in 500s. Now, going over the following transactions that took place in June, which should also be up in the corner now, I did invest $90,000 into my own business. So I would debit cash $90,000 to my business and credit my capital $90,000. After I invested money, I bought insurance, I paid rent for the shop, and like every other mechanical shop, I needed tools. So of course, I bought tools on account for $5,000 from Lowe's and has a useful life of 5 years, at which they will be donated to a mechanic school. So of course, I would debit tool supplies $5,000 and I would credit accounts payable Lowe's $5,000. That would be the same for when I bought food supplies. I bought food supplies from Walmart on account for $8,000. So I would debit food supplies $8,000 and then I would credit accounts payable Walmart $8,000. That would be the same thing for me when I bought office supplies from Staples on account for $1,000. I would debit office supplies $1,000 and I would credit accounts payable Staples on account Staples for $1,000. I also bought furniture because of my waiting lounge. Furniture was $5,000. $5,000 has a useful life of 5 years and has no salvage value. I also bought the furniture with cash, so of course I would debit furniture supplies for $5,000 and I would credit cash for $5,000 since I paid with cash. And of course I deposited my repair fees from fixing customer vehicles. And we would debit cash $36,300, whatever my deposit repair fees, which were around that range, and then we would credit repair fees, which was between $30,000 to $40,000 for the first month. Going down, I also purchased more food on account and more for Staples. The reason why I bought so much food is not to only pay for food for myself and my employees, but also for the customers in the waiting lounge. I also paid utilities and paid Walmart on account. Towards the end on June 30th, I did withdraw $2,000 worth of cash out of the business for personal use. So I would debit my drawing for $2,000 and I would credit my cash for $2,000. Also towards the end of June 30th, we also have the adjusting entries. So of course my office supplies, my food supplies, and my cleaning supplies did go down, and then my wages on hand but not yet been paid. So my office supplies remaining on hand were $400, so I would debit office supplies expense $400 and credit office supplies $600 because I used up $600 worth of office supplies. For food supplies remaining on hand was $15,000. I would debit food supplies expense $15,000 because that's how much I have left over, and I would credit food supplies $30,000 because that's how much I used for the month. Same would go for cleaning supplies remaining on hand. I would debit cleaning supplies expense for $2,500, and then I would credit cleaning supplies for $2,500. And then the wages on hand but not been paid at the end of June, I would debit wages expense $5,000 and then credit wages payable $5,000. Now going towards the income statements for the month of my business of June. We have my revenues, which the total revenues I made for month 1 was $178,000 total. Now we also have my expenses total, which the total came out to be $135,300. I subtract my revenues from my expenses, and my total net income came out to be $42,700. Next, the statement of owner's equity. Of course, I had no capital, but I did invest $90,000 during that month of June. I also brought my net income down for June, but I did withdraw $2,000 for personal use, so I would subtract that from my net income for June, thus giving my increase in capital, and then my total capital came out to $130,700. Then coming to the balance sheet, which total assets have to equal total liabilities and the owner's equity, my total assets came out to be $141,700. My liability total came out to be $11,000, but then add that towards my total capital, which was $130,000 and $700. My total liabilities and owner's equity came out to $141,700, which my total assets does equal my total liabilities and owner equities for the month of June. Next, now going towards the chart of accounts, as well as the following transactions that took place for the month of July. My chart of accounts did expand, of course, as you can see right here in the top in the corner again. My assets now, I now have community depreciation for my shop, for furniture, my surround system, big screen TV, of course, because you'll see I did make transactions and purchases during the month of July. My liability stayed the same, of course. My owner's equity stayed the same. My revenue, though, I thought my food supplies needed to dwindle, so what I did is to provide snacks for my customers in the waiting lounge. I signed a contract with online vending to install a vending machine with foods and drinks and pay 10% commission on sales. That got me my vending commission revenue. And then, of course, my expenses also expanded with depreciation expense in furniture, shop, surround sound system, and big screen TV. Like I said, the chart of accounts is listed in the hundreds, 200, 300s, all in order to account for the following transactions of July. Now, going over the following transactions that took place during that month, which should now also be up in the corner. Like I said, I did sign a contract with online vending, so I did debit cash $150, and I credit vending commission $150. So July 2nd, I also bought TV lounges surround system for my lounge because I thought it needed a little bright up. So I debited surround system for $3,000 and debited big screen TV for $4,800 and totaled those, and then got my credit, which is cash, for $7,800. The big screen TV is $4,800 and has an estimated useful life of 8 years and has a salvage value of $600. The TV system, the surround system, cost $3,000 and had an estimated useful life of 5 years and no salvage value. I paid cash for both of these, by the way. Going more down, I did pay for programming. July 3rd, I returned $150 worth of supplies back to Staples. So I debited accounts payable Staples $150 since they gave it back, and then I credited off supplies $150. More going down, in July 3rd, in preparation to purchase or buying a new shop, I did invest another $100,000 into my business. So I did debit cash $100,000 and I credited my capital $100,000. Soon, the day after, I bought a shop for $60,000, which has a useful life of 20 years and a salvage value of $35,000. So I debited shop $60,000 and I credited cash $60,000 since I paid with cash. From there on, of course, I did have to pay deposited repair fees from the customers from the cars we fixed, and then I did have to pay wages to employees, which did increase from me hiring more employees. I paid my utilities, I paid Walmart an account, and then of course at the end of July 31st, I did withdraw $5,000 from the business for personal use, which then I had to debit my drawing for $5,000, and then I credited cash for $5,000. Now, also towards the end of the month of July 31st, we also have my adjusting entries. Of course, we have the straight line depreciation of the surround sound system, the TV, the building, and the furniture. The sound system was $3,000 a month and had no salvage value, so I did $3,000 divided by the 60 months, which came out to $50 total assets every month. The straight line depreciation to depreciate the TV, I did $4,800 minus $600 of the salvage value, which came out to $4,200, divided by the 96 months, which came out to $43.75 in total assets in month. Same for building. Building was $60,000 and it had a salvage value of $35,000, which came out to a total of $25,000, divided by the 240 months, which came out to $104.15 a month in assets. And then of course my office supplies, food, cleaning did decrease. So my office supplies remaining on hand is $450. My food supplies remaining on hand is $10,000. My cleaning supplies remaining on hand is $1,000. And then I did do the straight line depreciation for furniture, which was for $5,000. It had no salvage value, and I divided by 60 months, which came out to a total of $83.33 a month in assets. And then wages earned but not yet been paid at the end of July was $5,000. Next, going over the income statements for the month of July 31st at the end. Of course, we have the total repair fees, which came out to $208,100, and then the vending commission revenue, which came out to $150, and the total revenues came out to $208 and $250. All the expenses added up came out to $117,431.23. I subtracted my revenues from my expenses and got my total net income. Next, my statement of owner's equity. Of course, I did have a capital this time, which the total came out to be $130,700. My investment made during the month was $100,000, so the total investments came out to $230,700. My net income for July was $90,818.17. I did withdraw $5,000 at the end of the month for personal use, so I would subtract that from my net income for July, and my increase in capital would go up, and then my capital total would be $316,518.17. Now to the balance sheet, which total assets have to equal total liabilities and owner's equity. My total assets came out to $332,368.77. And then my liabilities came out to a total of $15,850. But add that to my capital, which was $316,518.77, which the total liabilities and owner's equity came out to be $332,368.77, in which my total assets and total liabilities and owner's equities balance. My business, and that's my business. Thank you very much.